A leaked statement from a Saudi prince just confirmed what everyone feared. The petrodollar is dead. On June 9th, 2024, the 50-year petrodollar agreement between the United States and Saudi Arabia officially expired, and it was not renewed. Since then, Saudi Arabia has been quietly dumping the dollar. They signed a $7 billion currency swap with China. They're selling oil to China in yuan. They're joining the mBridge digital currency project with China, the UAE, and Thailand. They're attending BRICS summits and exploring membership. And now, a leaked statement reveals the Saudi royal family is preparing to announce major non-dollar oil contracts in 2026. This is the end of dollar dominance. And it's happening right now. This is the biggest geopolitical and financial story of the decade. And the mainstream media is barely covering it. In the next 14 minutes, I'm going to show you exactly why Saudi Arabia is abandoning the dollar, what it means for your money, and how to protect yourself before the collapse accelerates. Hit subscribe and turn on notifications, because tomorrow I'm releasing what happens when the petrodollar dies. Let's go. To understand what's happening, you need to understand the petrodollar system. In 1974, after the US abandoned the gold standard and the Arab oil embargo shocked global markets, the United States made a deal with Saudi Arabia. The deal was simple. Saudi Arabia would sell its oil exclusively in US dollars, and in return, the US would provide military protection, weapons, and security guarantees to the Saudi kingdom. This agreement created the petrodollar system, a framework where oil, the most critical commodity in the world, could only be purchased in dollars. This system gave the United States unprecedented power. Every country that needed oil had to first acquire US dollars, which created automatic demand for the currency. This demand allowed the US to run massive trade deficits, print unlimited money, and export inflation to the rest of the world. The petrodollar became the foundation of American financial hegemony. For 50 years, this system held. But on June 9th, 2024, the agreement expired, and Saudi Arabia chose not to renew it. Since that expiration, Saudi Arabia has been systematically diversifying away from the dollar. In 2023, Saudi Arabia signed a currency swap agreement with China worth approximately $7 billion, allowing direct trade between the Saudi riyal and Chinese yuan without using dollars as an intermediary. By 2025, that agreement has been expanded and operationalized. It's estimated that 15% to 20% of Saudi oil sales to China, Saudi Arabia's largest customer, importing roughly 1.8 million barrels per day, are now settled in yuan rather than dollars. Saudi Arabia has also joined the mBridge project, a central bank digital currency platform designed to facilitate cross-border payments without the dollar. The project includes China, the UAE, Thailand, and now Saudi Arabia. This is a direct infrastructure for de-dollarization, a digital alternative to the SWIFT system that bypasses U.S. financial control. At the same time, Saudi Arabia has been attending BRICS summits and is widely expected to formally join the bloc, which now includes Brazil, Russia, India, China, South Africa, and several new members like Egypt, Ethiopia, Iran, and the UAE. BRICS represents over 45% of the global population and a growing share of global GDP. The bloc's explicit goal is to reduce reliance on the US dollar in trade and create alternative reserve currencies. The leaked statement, reportedly from a senior member of the Saudi royal family, indicates that Saudi Arabia is preparing to announce major oil sales contracts denominated in currencies other than the dollar, primarily the yuan, but potentially also the euro and digital currencies, sometime in the first half of 2026. If this happens, it will mark the official end of the petrodollar era. While everyday Americans are being told the dollar is strong and the economy is resilient, the global financial architecture that supports the dollar is collapsing in real time. The petrodollar system allowed the US to print trillions of dollars without immediate consequences, because global demand for dollars, driven by oil purchases, absorbed the inflation. But now that demand is disappearing. Meanwhile, foreign central banks, sovereign wealth funds, and institutional investors have been quietly rotating out of U.S. treasuries and dollar-denominated assets. Saudi Arabia's foreign reserves, which stood at approximately $440 billion as of late 2025, have been increasingly diversified into euros, yuan, gold, and other non-dollar assets. China has been reducing its treasury holdings for years, from over $1.3 trillion at the peak to less than $750 billion today. Retail investors, pension funds, and ordinary Americans holding dollars, dollar-denominated bonds, and savings accounts have no idea this is happening. They're being told inflation is transitory, the dollar is strong, and everything is fine. But when the petrodollar officially dies and oil trades in multiple currencies, the automatic demand for dollars vanishes, and the currency will collapse. By the time the mainstream media reports it, it will be too late. Let's look at the hard data. The original petrodollar agreement, signed in 1974 between U.S. Secretary of State Henry Kissinger and Saudi officials, was a 50-year arrangement. It officially expired on June 9, 2024. There was no public announcement of a renewal. Since then, Saudi Arabia has made a series of moves signaling a strategic pivot away from dollar dependence. In November 2023, Saudi Arabia and China signed a currency swap agreement valued at approximately $7 billion, facilitating bilateral trade in local currencies. By 2025, this mechanism has been actively used. According to reports from Chinese customs and energy analysts, an estimated 15% to 20% of Saudi oil exports to China are now being settled in yuan. Given that China imports roughly 1.8 million barrels per day from Saudi Arabia, this represents hundreds of thousands of barrels per day no longer traded in dollars. Saudi Arabia officially joined the Enbridge CBDC project in June 2024, alongside the central banks of China, the UAE, and Thailand. The project, facilitated by the Bank for International Settlements, is designed to enable instant cross-border payments using central bank digital currencies, bypassing the need for correspondent banking in dollars. Saudi Arabia has also been a regular participant in BRICS summits. In August 2023, Saudi Arabia was formally invited to join BRICS. While the kingdom has not yet officially accepted full membership, senior Saudi officials have attended summits and working groups throughout 2024 and 2025. Analysts expect formal membership to be announced in 2026. On the Treasury front, Saudi Arabia's holdings of U.S. government debt have been declining. According to Treasury International Capital data, Saudi holdings dropped from approximately $135 billion in early 2020 to around $108 billion by mid-2025, a reduction of roughly 20%. This is a clear signal of reduced dollar exposure. U.S.-Saudi relations have been strained. The Biden administration's pressure on Saudi Arabia over human rights issues, the Yemen war, and the Khashoggi case created diplomatic friction. More recently, disagreements over Israel normalization talks and oil production levels have further damaged the relationship. Saudi Crown Prince Mohammed bin Salman has been openly courting China and Russia as strategic partners. We've seen reserve currency transitions before. The British pound was the global reserve currency throughout the 19th and early 20th centuries, backed by the British Empire and the gold standard. After World War I and World War II, the pound collapsed as Britain's economic and military power declined. The US dollar took over as the reserve currency under the Bretton Woods system in 1944. When reserve currencies collapse, the effects are catastrophic for the issuing country. Britain went from global superpower to economic stagnation and relative decline. The transition took decades, but the loss of reserve status meant Britain could no longer export inflation, had to balance its books, and faced severe economic contraction. In 1971, President Nixon ended the dollar's convertibility to gold because foreign central banks were draining U.S. gold reserves by exchanging dollars for gold. The petrodollar system, established in 1974, replaced gold backing with oil backing. Now, 50 years later, the oil backing is ending. Without gold and without oil, the dollar is backed only by debt and military power, and both are being challenged. The pattern is clear. Reserve currencies lose status when trust erodes, when the issuing country runs unsustainable deficits, and when alternatives emerge. All three conditions exist today. Signal 1. Watch for Saudi Arabia to officially announce yuan-denominated oil contracts. This would be the definitive signal that the petrodollar is dead. If Saudi Arabia openly sells oil in yuan to China, other oil producers will follow. The dollar's automatic demand disappears overnight. Signal 2. Watch the US dollar index, known as DXY, which measures the dollar against a basket of major currencies. DXY is currently around 106. If it breaks and holds below 100, it confirms technical breakdown and accelerating dollar weakness. A move below 95 would signal panic. Signal 3. Watch for Saudi Arabia to formally join BRICS. If the kingdom officially becomes a BRICS member, it represents institutional endorsement of de-dollarization and a geopolitical realignment away from the US and toward the China-Russia axis. Signal 4. Watch US Treasury yields. If the 10-year Treasury yield spikes above 5% and stays there, it signals that foreign buyers are stepping away from US debt. This would force the Fed into emergency QE and accelerate dollar devaluation. The fundamentals are undeniable. The petrodollar agreement expired in June 2024 and was not renewed. Saudi Arabia has signed currency swaps with China, is selling oil in yuan, joined the Enbridge digital currency platform, and is attending BRICS summits. Saudi foreign reserves are being diversified away from dollars. U.S.-Saudi relations are strained. China is now Saudi Arabia's largest oil customer, importing 1.8 million barrels per day. The U.S. is running $2 trillion annual deficits, with $36 trillion in total debt. And without automatic dollar demand from oil purchases, the U.S. cannot sustain these deficits without catastrophic inflation or currency collapse. The petrodollar was the foundation of dollar hegemony. Without it, the dollar becomes just another fiat currency and a heavily indebted one. Risk 1, holding dollars and dollar-denominated assets exposes you to currency devaluation. When the petrodollar dies, the dollar loses 20% to 40% of its purchasing power within months. Risk 2, U.S. Treasuries and bonds become toxic. If foreign buyers disappear, yields spike and bond prices collapse. Long-duration Treasuries could lose 30% or more. Risk 3, inflation explodes. Without automatic dollar demand, the Fed cannot print money without immediate inflation. Expect CPI to spike to 6% to 10% within a year of petrodollar death. The hedge, gold, silver, Bitcoin, foreign currencies, commodities, and real assets. Diversify out of dollar exposure now. The U.S. government and Federal Reserve will tell you the dollar is strong, backed by the full faith and credit of the United States, and that there is no alternative. This is psychological warfare. The petrodollar expired. Saudi Arabia is diversifying. BRICS is expanding. The yuan is being used for oil. The data is public, but the narrative is controlled. Don't fall for it. Follow the money, not the propaganda. Scenario 1, 45% probability, gradual transition through 2026. By year end, 30% to 40% of Saudi oil sales occur in non-dollar currencies. Scenario 2, 35% probability, accelerated collapse. Saudi announces major yuan contracts in Q2 2026. Dollar crashes 20% or more within months. Treasury yields spike. The Fed prints. Gold hits $500 to $500. Bitcoin rallies to $200,000. Scenario 3, 20% probability, status quo maintained. Geopolitical pressure and security guarantees keep Saudi Arabia in the dollar orbit through 2026. De-dollarization delayed but not stopped. Timeline, watch Q2 2026 for major announcements. The next 6 months are critical. The petrodollar expired June 9th, 2024, and was not renewed. Saudi Arabia signed currency swaps with China, is selling oil in yuan, joined Enbridge, and is exploring BRICS membership. A leaked statement reveals major non-dollar oil contracts coming in 2026. Watch 4 signals. When oil contracts, DXY below 100, Saudi joins BRICS, and Treasury yields above 5%. The petrodollar is dead. The dollar will collapse. Hold gold, Bitcoin, and hard assets. Subscribe now for tomorrow's What Happens When the Petrodollar Dies. Comment, are you holding dollars or gold? Let's go.